Hey everyone, welcome back to the channel. If you've been following the silver market lately, you know it's been absolutely wild. We're talking about moves that we haven't seen in decades, prices that seemed impossible just months ago, and predictions that sound frankly insane. But here's the thing. One of the world's largest banks, Bank of America, is standing by a forecast that has everyone talking. They're predicting silver could hit $309 per ounce in 2026. Yes, you heard that right. $309. Now, as I'm recording this on February 14th, 2026, silver is trading around $78.90 per ounce. That means Bank of America is predicting a 279% gain from current levels. So the question everyone's asking is simple. Is this realistic? Or is this just hype? That's exactly what we're going to break down today. And I promise you, by the end of this video, you'll have a much clearer picture of what's really happening in the silver market. Let's start with where we are right now, because the context is absolutely crucial. Silver is currently up about 4.97% today, gaining $3.74. But zoom out a bit, and the picture gets even more interesting. Over the past year, silver's price is up 162%. Think about that for a second. If you bought silver a year ago, you've more than doubled your money. That's not something that happens in stable, boring markets. But here's where it gets crazy. Just a few weeks ago, in late January, silver wasn't trading at $78. It was trading above $100 per ounce. Some sources reported it hitting as high as $117 to $120. That's an all-time high, smashing through every previous record. The market was in full-blown mania mode. Retail investors were piling in. Social media was buzzing, and it felt like silver was going to the moon. Then came January 30th. On that single day, silver crashed nearly 30%. It was the biggest one-day decline since 1980, which, if you know your history, was the Hunt brothers' silver manipulation saga. Billions of dollars evaporated in hours. People who bought at the top were devastated. The U.S. Treasury Secretary, Scott Bessent, came out and blamed Chinese traders for the extreme volatility, calling the rally a speculative blow-off. The entire precious metals community was in shock. So now we're sitting at $78, which, by the way, is still an incredible price historically. Just 3 days ago, on February 11th, silver hit another all-time high of $84.72 before pulling back. The volatility is insane. And this is the environment in which Bank of America's Michael Widmer is maintaining his $309 prediction. Now, before we dismiss this as crazy talk, we need to understand why someone would make such an aggressive forecast. Let's look at the fundamentals, because this is where things get really interesting. The silver market has a structural problem, and it's been building for years. Right now, we're in the 6th consecutive year of a supply deficit. Think about what that means. For 6 straight years, the world has been consuming more silver than it produces. The deficit for 2026 is expected to be 67 million ounces. That might not sound like much, but in a market that trades roughly 1 billion ounces of supply against 1.2 billion ounces of demand, it's significant. Here's the thing about supply deficits. They work slowly until they don't. When you have persistent deficits year after year, inventories get drawn down. Eventually, you reach a point where there simply isn't enough metal to meet demand at current prices. That's when prices have to rise dramatically to either increase supply or destroy demand. Some analysts believe we're approaching that inflection point. The supply side of the equation is particularly concerning. Global silver supply actually fell from 1.07 billion ounces in 2010 to roughly 1.03 billion ounces in 2024. That's right. Supply went down over 14 years. Meanwhile, demand has been steadily climbing, reaching an estimated 1.2 billion ounces or more. The gap between supply and demand has been estimated by some analysts at 160 to 200 million ounces for 2025. That's a massive structural imbalance. Now, you might be thinking, okay, but if prices are this high, won't miners just produce more? That's the logical response. But mining doesn't work that way. It takes years to bring new mines online. You need to do exploration, get permits, build infrastructure, and actually extract the ore. Most silver is also produced as a byproduct of other metals like copper, lead, and zinc. So even if silver prices go up, you can't just flip a switch and produce more. The supply response is slow and limited. On the demand side, things are equally interesting. About 50% of silver demand comes from industrial applications. This is different from gold, which is primarily used for jewelry and investment. Silver is in your smartphones, your solar panels, your electric vehicles, your LED lights, and increasingly in data centers and AI infrastructure. The industrial demand forecast for 2026 is around 650 million ounces, which is actually down 2% from prior years. Why? Because high prices are forcing some industries, particularly solar panels, to use less silver through thrifting and substitution. But here's the offset. New technologies are creating fresh demand. Data centers needed for artificial intelligence are silver-intensive. Electric vehicles use significantly more silver than traditional cars. 5G infrastructure requires silver. These growth sectors are supporting silver consumption even as other sectors try to reduce usage. Then you have investment demand, which is the wild card. When people lose confidence in traditional assets, when they worry about currency devaluation, when geopolitical tensions rise, they buy precious metals. Right now, all of those factors are in play. Markets are pricing in about 60 basis points of Federal Reserve easing by year-end, which means lower interest rates and a weaker dollar. Disappointing U.S. economic data, including retail sales that stalled in December, has people worried. Confidence in U.S. assets has been deteriorating. All of this drives safe haven demand for silver and gold. So here's where we stand. Tight supply, strong structural demand, and increasing investment interest. That's the bullish case, and it's pretty compelling. But let's be honest about the bearish case too, because that $309 prediction requires us to consider both sides. The biggest risk to silver right now is exactly what we saw on January 30th, speculative excess. When prices rise too far too fast, you get unsustainable bubbles. Retail investors chase momentum, leverage gets too high, and then something triggers a cascade of selling. The 30% crash was a brutal reminder that silver can be extremely volatile. If we see another spike toward $100 or beyond, there's a real risk of another violent correction. Industrial demand destruction is another concern. At $78 per ounce, many industries are actively working to reduce their silver usage. Solar panel manufacturers are already doing this successfully. If prices go to $100 or $200 or $300, the incentive to find alternatives or use less silver becomes overwhelming. This could significantly reduce demand from the sector that represents half of all consumption. UBS, another major bank, has a much more conservative forecast than Bank of America. They're predicting silver will return to $100 by next month, but then fall back to $85 by year-end. They view the recent volatility as normal within a bull market, but they're not calling for $300 silver. That's a huge difference in outlook from two sophisticated institutions. There's also the regulatory risk. When markets get too frothy, governments sometimes step in. We've seen this historically with silver. If regulators decide that speculation has gotten out of hand, they could impose position limits, margin requirements, or other restrictions that cool the market down. So what's going to happen next? This is the million-dollar question, or in this case, the $230 per ounce question. Looking at the technical picture, silver has support in the $77 to $78 range, which is roughly where we are now. There's resistance around $94 and psychological resistance at $100. If silver can break through $100 and hold it as support, that would be a very bullish signal. The path to $309, if it happens, probably doesn't go in a straight line. We're likely to see continued volatility, with sharp rallies followed by corrections. Each correction will shake out weak hands and over-leveraged traders. But if the structural deficit continues, if investment demand remains strong, and if we don't see massive industrial demand destruction, silver could grind higher over the course of the year. Bank of America's forecast might sound extreme, but consider this. A year ago, if someone told you silver would be at $78 today, you probably would have thought that was crazy too. Silver has already gone up 162% in 12 months. Another 279% gain would be massive, but it's not without precedent in commodity markets when you have the right combination of factors. Here's my take on the most likely scenarios. In a moderate bullish case, silver consolidates between $70 and $90 for the next few months, then makes another run at $100 to $120 by mid-year. If that happens and holds, we could see $150 to $200 by year-end. That would still be well short of $309, but it would be an incredible return. In a very bullish case, which is what Bank of America is betting on, we see multiple waves higher, with each correction getting bought aggressively. Investment demand accelerates as more institutional money comes in. Perhaps we get a currency crisis or major geopolitical event that sends precious metals vertical. In that scenario, $300 becomes possible, though I'd argue it would be temporary and likely followed by a sharp correction. In a bearish case, the recent volatility scared off enough investors that silver struggles to regain momentum. Industrial demand destruction accelerates. Maybe the Fed doesn't cut rates as much as expected, strengthening the dollar. In this scenario, silver could drift down to $60 or even $50 before finding a bottom and starting a new leg up. The honest answer is nobody knows for sure. Michael Widmer at Bank of America believes in his $309 forecast enough to maintain it publicly. That takes conviction. But UBS, equally sophisticated, sees $85 by year-end. Both can't be right. What I can tell you is this. The silver market is set up for a potentially historic move. The fundamentals are strong, the technical picture is constructive after the recent correction, and sentiment, while cautious after the crash, hasn't completely turned bearish. If you're invested in silver, buckle up. If you're thinking about getting in, understand that this is a volatile, risky market that could go either way. The Bank of America prediction isn't hype, in the sense that it's not based on nothing. There's real analysis behind it, real supply-demand fundamentals, real structural deficits. But is it realistic? That depends on a lot of factors that are impossible to predict with certainty. What we can say is that silver has the potential for extraordinary gains if everything aligns, but also the potential for brutal corrections if speculation gets ahead of fundamentals. Thanks for watching, and I'll see you in the next one.